Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 12th, 2025, and we're diving into the latest earnings report from Madison Square Garden Sports. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Madison Square Garden Sports, known for its iconic sports franchises like the New York Knicks and Rangers, has just released its fiscal 2025 fourth quarter and full year results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the revenue figures. Madison Square Garden Sports reported a fourth quarter revenue of $204 million, which is a 10% decrease compared to the previous year. However, the full year revenue saw a slight increase. John, what are your thoughts on these numbers?
The fourth quarter revenue decline is primarily due to fewer playoff games and lower league distribution revenues. The Knicks' playoff run was a highlight, but the Rangers didn't qualify, impacting overall playoff-related income. Despite this, the full-year revenue increased by 1% to $1.039 billion, thanks to higher per-game revenues and strategic amendments to media rights agreements.
And what about profitability?
The company reported an operating loss of $22.6 million for the quarter, with an adjusted operating loss of $16.8 million. This is a significant drop from the previous year's operating income, mainly due to increased direct operating expenses and reduced revenues.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 37 cents for the quarter. However, Madison Square Garden Sports reported an actual EPS of 7 cents. John, how significant is this beat?
This is quite a positive surprise. The actual EPS of -7 cents is much better than the forecasted 37 cents, indicating that the company managed its costs effectively despite the revenue challenges. This beat reflects well on the company's operational adjustments and strategic decisions.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Direct operating expenses increased by 44%, and SG&A expenses rose by 7%. What does this mean for the company?
The increase in direct operating expenses is largely due to higher provisions for team personnel transactions and league revenue sharing expenses. However, the company is investing in its teams and adapting to the changing media landscape. CEO James Dolan expressed confidence in the value of owning the Knicks and Rangers, which suggests a positive long-term outlook.
What can investors expect moving forward?
Looking ahead, the company anticipates strong demand for its franchises. The strategic amendments to media rights agreements and continued investment in team performance are expected to support future growth.
Key takeaways. In summary, Madison Square Garden Sports faced some challenges this quarter with a decline in revenue and increased expenses. However, the company beat EPS expectations and remains confident in its long-term prospects. John, any final thoughts?
Despite the short-term hurdles, the company's strategic initiatives and strong franchise value position it well for future growth. Investors should keep an eye on how these strategies unfold in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Madison Square Garden Sports' performance in the comments below.